Let me bring on board Jay Thakkar, Head of Derivatives and Quant Research, Vice President ICICI Securities Limited. Jay, very good having you here. Let me start off by understanding what are the critical levels that you're looking out for now, because we've suddenly slipped 5% in 5 trading sessions. It's not been a straight line kind of move either. It's been choppy.
Hi, very good afternoon to you, and thanks for having me on
Very
the
good afternoon.
show. I would say that see, after Nifty broke 24,500 levels approximately, I mean, wherein for several times it had actually taken support around those levels. Whenever, in fact, after recovering, from 22,000 or 21,750, the bottom which was made earlier. So after that, whenever Nifty had actually corrected, it had never broken 24,500 levels. And once it broke that, I mean, you have seen this almost 12 to 1,300 points slip in a few day trading sessions, in fact, of which we almost saw 500 points getting taken off in today's session itself. Now, interesting thing, what I would like to highlight is that how far can we go from here on as well. So I would say that in the worst case scenario, 21,800, 22,000 levels. That is what you can see. Why? Because generally what happens is market sees a flat correction, a very, very flat correction. And you must have definitely seen these kind of stocks as well, wherein SBI was trading between 150 to 350 for almost 10 years. And that is one decade. And many such stocks have actually traded within this range. Although the range is too big for anyone to actually, take it when it comes down from 26,400 to 22,000. But that's what the range has been. I mean, since past 2 years, I mean, since we have seen Nifty topped out in September 2024. Since then, this has been broadly the range. So in the worst case scenario, if you ask me where can Nifty slip until, then it is 21,800 to 22,000. That's point one technically. Derivatives point of view, we have seen India VIX, coming to almost 22 now. It had made a high of 24.50, right? We have seen during Russia-Ukraine war that India VIX had actually gone to 32, right? So is there still a room for India VIX to jump? Yes, definitely it has. Is it that it can surpass those levels? I doubt so. Why do I doubt so? Because the derivative indicators like the volatility spike ratio has already reached to 1.5, 1.6. Whenever it reaches these levels, generally you see a bottom formation, and post which you see 5 to 6% kind of a rally in market. Second is the IVR, IVP data, again derivative indicators, that is called IV percentile and IV rank. They are trading at their extreme since past 8 trading sessions. Can they further extend? Yes, they can. But all I mean to say is that you don't have more than 1,000 to 1,200 points now risk from here on. So if you get that, that would be a good buying opportunity.
Got it. So maybe another 5% odd from here. Jay, how do you place your bets? What's the probability that that 5% correction comes? What's the probability we see a change of events and we turn from here? And what actionable insights can you give us? What actions should our viewers take starting, say, Monday morning?
Sure. One action is that I've clearly mentioned that if at all there is a 5% correction from here on, if at all, then definitely you should be, getting into the markets on the long side. You should be start building the portfolios from here on, because once that has happened, I think market will bounce back, and minimum 5 to 6% bounce is what I've said, which is nothing but 12 to 1,500 points, and to the max we've seen 11% kind of a jump as well in the best case scenarios, which could be around say 2,500 points. So the opportunity would be great if index can bounce so much, stocks can bounce back double as well, right? So 22,000 levels actionable is that if Nifty comes there, build your portfolio, right? At these levels, I mean, you can buy with a staggered approach, because if you have a 5% downside risk from here on Nifty, then definitely at each 1% or maybe each 2%, you can invest with a staggered approach so that you get a good average. And if at all it doesn't come to those levels, you don't miss out at least. Third actionable, which I would like to highlight very clearly, if at all from here on, if you see any announcement related to de-escalation of the war, point one, or without that, if at all you see India VIX, trading down for 2 or 3 consecutive days, that would indicate that probably the market now seems to be forming a bottom. So that would be the first indicator, India VIX, because till that doesn't come down, I don't see market is likely to stop its downtrend.
Jay, I just have 15 seconds more. Give us ideas, your top two ideas at this point, buy, sell.
Oh, sure. See, the best idea at this point of time, which I would say is first from the power sector. So, we like Tata Power and NHPC from the current levels. NHPC, I think, can go to 85. One can buy that with a stop loss of 70. And the second buy recommendation would be Britannia from the FMCG. I think it can go to the levels of 6,400, currently at around 5,800. So, one can place a stop loss below 5,700 and go long on Britannia. So, one from FMCG and one for power. One from power. These are the two safe bets as of now, and definitely one can go long on Aurobindo Pharma as well, because pharma is also another sector along with power and FMCG, which is doing quite well and has been quite resilient as of now.
Jay, thank you so much for coming in and speaking with us. It's great contextualizing this at the end of a week, which has been, at the very least, very, very painful. So thanks so much for coming in and speaking with us.